In this demo, we'll talk about an amazing yet simple tool we offer on gotchalosers.com, which allows you to hold on to your investment gains, the percentage trailing stop. Now, what is the percentage trailing stop? It's a price that's a fixed percentage below the highest close price a stock attains after you bought it. The idea is that you sell your position once the stock's price hits the trailing stop price. Now, the key feature of the trailing stop is that it keeps moving up if your stock is on your way up, but it never moves down with the stock price. Once again, what it means for you is you hold on to your gains. Now, let's look at an example. Say you have a position in Apple, the stock ticker is AAPL, and you bought your stocks on July 30th, 2012. You paid $595 for each stock, and on the same day you set a percentage trailing stop of 20%. The stop price on that day is $476, which is 20% below your entry price. Let's look at what happened after that. The blue graph represents Apple's close price movement, and the orange one tells you what happens to the trailing stop. This dot represents your entry price of $595 on July 30th, and this orange dot is the calculated trailing stop price on the same day. After that, Apple generally trends up. You'll see that the trailing stop is also moving up, always staying 20% below the highest close that Apple attained after you entered. Apple peaks at $702 on September 17th. The trailing stop is adjusted up at $561, which is 20% below $702. The stock's close price is not even close to its trailing stop. It's a good time to own Apple stocks. What happens next? Here's the peak price that we just saw of $702 and the corresponding trailing stop of $561. But the good times have come to an end and Apple begins to slide from its peak. You can see the blue line is trending down after the peak, but the orange line of the trailing stop stays constant, 20% below the peak price. Until finally the blue line meets the orange line on November 7th. Your trailing stop has been hit and it's time to sell your position. You made a net return of fixed percentage below the peak price that Apple attained by using the trailing stop and held on to your gains, even though Apple's stock price crashed. Now, to set it up on gotchalosers.com, it's really simple. You select the stock that you want to set the alert on. You'll see that my position information is already entered, which is required to set the trailing stop alert. Now I'll go to the Alerts tab, click on Edit, and from the Alert Type drop-down, I will select Percentage Trailing Stop. The only parameter that you need to enter is the percentage value itself. In this case, that'll be 20%. I'm going to hit Save, and that's it. A 20% trailing stop alert has been set on my Apple stock, and I will receive an email alert whenever that is met. Thanks for watching.